So yeah, thanks for having me. I'm Keith Wallington. I want to talk about what we're seeing in this huge acceleration in SaaS at the moment, or over the last kind of 7-8 months. I mean, obviously it goes back more than 7 or 8 months, but really we've seen an incredible acceleration recently. And there's some interesting stuff to unpack around what's going on there, what the drivers are. So quickly on me, so I'm Keith Wallington. I was Chief Operating Officer at a business called Mimecast, joined in 2008, just after helping them raise their Series A, and really helped scale the organization all the way through to 2015 when we IPO'd. I managed to get out of the organization just before we IPO'd because I'm not really I don't think post-IPO is my natural habitat. So I moved out and really converted myself into being a investor and chairman in B2B SaaS businesses. I absolutely love the SaaS model, and I hope that I'm supporting some of Europe's most promising SaaS businesses. So I invest, I become chairman, and I try and keep my focus quite tight to around 5 or 6 businesses because I like to engage pretty deeply. So I'm going to share my screen, share a presentation with you. And I hope you can all see that. So we've titled this discussion today, "Software is Eating the World," which is obviously a saying you'll be aware of from Mark Andreessen. It's a fantastic line that's been around a long time, and it just works so well. But we've been a bit naughty, and we've added another line below that, which is, "And we are chewing faster than ever." And we wanted to take an opportunity to talk through some of the thoughts we have around why this is happening. So a couple of interesting pictures. First, I'm going to just move past the story about me, which you've already got. Oh, I should mention that I also work with Ox, advise Ox, work with them. I think we have a similar approach to working on B2B SaaS, and hence why I'm here today, I suppose. So, first of all, let's have a look at some numbers. So if you look at that graph on the left-hand side, we've got some lines along the bottom, as they normally are in these graphs that are put up to make a point. And that's Dow Jones and NASDAQ index. And you'll see that, hey, they've actually done pretty well. But if you look at the Bessemer Venture Partners NASDAQ Emerging Cloud Index over the last 4 years, it's absolutely pulled away. I mean, public cloud has absolutely pulled away from the market. And then more importantly, more amazingly, since the beginning of 2020, we've seen a huge separation between those underlying indices and the BVP index. And that's all public cloud. If you look at the view on the right-hand side, you'll see that in 2019, we saw $4.5 billion worth of value at IPO of cloud businesses. And 2020 so far, not even the full year yet, we've already done 10.4. So there's something remarkable going on in SaaS. And we like to unpack that a little bit more. Here's another really interesting view. On the left-hand side, you've got cloud-native businesses and the incredible market cap that they've added between January and October this year. And on the right-hand side, you've got the first-gen technology, superpowers, Cisco, Oracle, and SAP, who've seen a very different performance this year. Obviously, SAP or SAP has been investing very heavily in SaaSifying and cloudifying their business over the last sort of decade, and so maybe some of those investments are paying off in valuation over the last 6-7 months. But by and large, you see a very big difference between these two groupings of businesses. So why? So what's going on? Well, it's not because they're performing better. It's not because public cloud is performing better in terms of fundamental metrics. So let's look at some classic SaaS metrics. On the left-hand side, our growth is forecast down. It's not very exciting. Same with new bookings as a percentage of R. Churn is very slightly up. In fact, I think probably surprisingly to all of us, if you think back to where we were 6-7 months ago, trying to forecast what was going to happen to our businesses, actually churn is in a pretty stable place. And blended CAC ratio slightly up, maybe more than just slightly up. But that makes sense where you've invested in that go-to-market machine. But because of a deflated growth trajectory, you're not seeing that investment distributed across as many customers as you were hoping to bring on, and hence your CAC ratio and your payback periods will have gone up a bit. So on the right-hand side, you can see that there's this sort of bit of a sideways move in 2020 for SaaS. It's not showing significant performance uptick. And yet, looking at forecasts for 2022, 2021, the view is that we're going to be right back on track. So what's going on here? Why are we seeing this significant change in valuation and forecast around future performance, even though we're not seeing great performance now? Well, here's some thoughts from our friends Satya, Mark, and Sundar. Basically, they're all saying that they are seeing massive acceleration of cloud adoption. And really, Satya says he's seen 2 years worth of digital transformation in 2 months. And I think that's certainly a big clue to some degree as to what's going on here. So unpacking it a bit further, you'll all remember the crossing the chasm theory, and I think it absolutely stands up. Going back a way, the big challenge for technology businesses and SaaS businesses, certainly when I think about my experience at Mimecast in 2008 through 2010, we were having to pitch companies the concept of putting their data in the cloud. And back then, the cloud was a big ask. We had to do a lot of work to help companies overcome the product risk challenge of making a decision to go with a SaaS cloud-based vendor. And that's certainly changed. And I don't think that's necessarily been a change that's only occurred this year, because all of us gathered here today have been crusading SaaS and cloud for a long time. And so over the last 10 years, we've definitely seen an evolution around the acceptance of cloud and SaaS. But certainly in the last, this year, and particularly post-COVID, we've seen a massive acceleration where the barriers have fundamentally dropped. Even the most risk-averse have really had to become adopters of cloud, because in a remote-first world that we're now all working in, you have to. There's just limited alternative options. So unpacking that a bit further, what do we think the key sort of underlying drivers are for this change, and why SaaS is doing so well? Well, first of all, the SaaS business model, the cloud delivered SaaS business model, is absolutely, maybe accidentally, but absolutely geared for a remote first world. If you think about it, customers, you think about yourselves in your buying decisions. You can discover, evaluate, buy, deploy, onboard, use, get help, buy more, entirely online, entirely remotely, without any need to meet anybody in any form of face-to-face physical presence process. So that's a huge factor. The second is the significant emergence of the product-led growth mechanism means that all of that stuff I just mentioned can be done without the prospect, without you as the buyer having to talk to anybody, really. You can go entirely DIY, so to speak, in terms of how you self-serve on those SaaS platforms that you subscribe to. We've also seen, and I think this is a 10-year trend, which is now benefiting hugely from what we've seen in this last year of extreme remote working, or this last 7 months of extreme remote working, and that is that the cloud ecosystem is now propelling the cloud ecosystem. If you think about the tech stack that you've deployed at your stage of your business's journey to deliver your operating model and the tools you need for your business, how much of that is SaaS and how much of that is not SaaS? So we've reached a point where the cloud economy is feeding on the cloud economy, the SaaS economy, which is obviously fantastic. And then second last, subscription as a model is no longer a question that people need to ponder, both in a B2B and a B2C context. Subscription-based services are normal, they're de facto, it makes sense. Nobody fundamentally questions that model, although I appreciate there are exceptions and good exceptions. So SaaS itself has crossed the chasm. We are now in a position where we no longer need to pitch people on why cloud and SaaS is the right approach. And those are profound drivers. So moving it on a little bit. This is not the first time the world has been through an economic crisis, a global economic crisis, and there have been many previous. In fact, sadly and interestingly, it's my third one. My brother and I had to wrap up our first startup when the dot-com bubble burst, just weeks before we were listing our business on NASDAQ. Then, of course, I was in the global financial crisis at Mimecast, where our growth accelerated quite dramatically. And back then, remember, we still had the headwinds of having to pitch cloud and pitch SaaS, But back then, we went to market around a message of reducing cost. Remember that most companies in the global financial crisis were having to radically cut their IT budgets as they were known back then. We don't even have IT budgets anymore in many businesses. We just have budgets to acquire services to deliver what we need to deliver. But back then we spoke a lot about reducing costs, improving return on investment, reducing risk, because back then a lot of software was on-prem, and it was difficult to support all of those on-premise installations. And then thirdly, we talked about end user productivity. So we pitched it as, you can achieve all these cost efficiencies that you need to because you've had to slash your budgets, but your end users will be more productive than they were before. That was very useful, but we were still pitching against the headwinds of cloud and SaaS. We're now in a world in 2020 where remote working is forcing companies to adopt a new way. And they're also fundamentally prioritizing business continuity and making sure their team can do their jobs wherever they are. Those are two massive factors that are helping us achieve the scale we are now. So the timing has never been better. And I mean that with great respect and sensitivity to the reasons why we are going through a global economic crisis and are forced into a remote working context. Highly sensitive to that. But this is a time that we can use to learn a lot of lessons about our business. So two thoughts. One, be hyper-focused on your ideal customer profile. This is not a time to experiment with 12 sectors and dozens of use cases and many go-to-market options. Absolutely experiment, but be very methodical in your decision-making and your tracking of those experiments, and make decisions quickly, but on sound data to constantly evolve that hypothesis testing. And second, move at speed. So I just mentioned, making decisions quickly, but really velocity is the ultimate moat. So don't sit on your hands. There is an opportunity now to potentially accelerate your business in a space of months or 6 months that would normally have taken years in terms of adoption by the market. So those are important thoughts, I think, from me. I'd also like to suggest that the upcoming tracks for the rest of today, and here they are, will be great opportunities to bed that thinking down more. So 4 really interesting discussions by a range of people, some of who I know pretty well. I think will all give you good opportunity to think through some of the stuff more and get more ideas. Please think about using Q&A in those sessions. Absolutely ask questions that help you triangulate the somewhat maybe generic guidance you're getting from these people. Try and really get that targeted down to your specific business situation, because great opportunity to do that today. Awesome lineup. I hope you enjoy it. Thank you very much for listening to me. I hope you've been able to hear me. Enjoy the rest of the day.